Hello and welcome. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwago. Thank you for joining us. Coming up on the show, Nigeria's Manufacturing Purchasing Managers Index falls to 54.6 reading in January. South Africa's ABSA PMI rises in January to hit 9-month best. Plus, Uganda divided over new Chinese-built $580 million expressway. Now let's get the show started with the markets. And here on the African continent, or rather before the markets, we'll look at the PMI coming out from Nigeria, where the manufacturing activity measured by Purchasing Managers Index tumbled to 54.6 reading in January. A report released today by FBN Quest reveals that 4 of the sub-indices were in positive territory, with highest reading for delivery times, while the lowest was recorded in workforce or new hiring by manufacturers. FBN Quest report says the headline reading declined significantly from 68.7 in December of 2017 to 54.6 in the first month of the new year, which was attributed to a short-lived boost in seasonal demand. Reading for new orders of goods and supplies also slumped last month, as revealed in the output sub-index. And now to the markets, and here on the African continent and at the Nigerian Stock Exchange, stocks from the consumer goods were leading the losers at intraday, dragging down the index 0.38%, following the unimpressive PMI numbers released today. Meanwhile, in South Africa, the JSE index was up 0.57%, as South Africa's seasonally adjusted ABSA Purchasing Managers Index rose in January to its best reading in 9 months, as business activity recovered and new sales orders increased. Egypt was also up 0.39%. However, Nairobi continued its fall on Wednesday following the political unrest in Kenya. In the Middle East, most of the markets were looking up at intraday except the Saudi index, as blue-chip Saudi Arabian mining company Ma'aden fell in response to a surprise fourth-quarter loss. The Saudi index edged down 0.24%. In Dubai, the index rose 0.2% as Emma Properties, which had been weak in the last several days, rebounded 0.8%. Abu Dhabi's index was up 0.22% and Qatar was up 0.03%. Qatar Commercial Bank rose 1.6% after its chief executive said on Wednesday that it would deploy more capital to Turkey to benefit from closer political ties with that country. And European stocks were higher in early trade as investors reacted to a slew of corporate earnings. Let's talk more with Daniel Koop. Hello, Daniel. Good afternoon.
Good afternoon to you, Jimmy, from the Frankfurt Stock Exchange. Yeah, you just mentioned the numbers here at the blue chip index DAX. We are pretty much at the same level as we were yesterday. Not much happening here on our side.
Right, great. Let's look at some of the earnings, of course, from big oil firms like Shell and Chevron, who's grabbing the headlines right now. Are these numbers comforting to oil stocks, investors constantly unnerved by the state of the global oil market?
Yeah, exactly. Those numbers from Shell are very interesting that we are getting them today. It seems that the company is really benefiting from the very good and solid oil price. We remember that the trend of the oil price has been pretty much up and up during the last weeks and months. And the company has been really benefiting from this quite a lot. So in 2017, the company was making lots of money already, a big plus of $13 billion US, which is also going to make investors happy because Shell is promising already right now to give them a very high dividend. 2017 for the company was also a year of reform. We remember that the company was announcing in the past that they were doing quite some restructures inside of the company, which also meant for some people that they were losing their job. The biggest problem for the company at the moment is the very high debt that the company is having. The debt was up at some time, even with $80 billion US. Now their surplus will be used to reduce the debt.
Still on energy, utility giant Enel is reportedly evaluating the market for selling electricity to digital currency miners. This was despite reports of about $44 billion wipeout in Bitcoin value in January. Does it look like the European Bitcoin investors are worried at all?
Well, exactly, Chimi. There is still this question where all of this is going to go with Bitcoin at the end. Yesterday, some relief also from the investors' perspective when South Korea announced that they would not be banning the cryptocurrency in the country. South Korea was thinking already for some weeks if they would really enforce a complete ban of cryptocurrency platforms in the country. Remember that the Bitcoin at some part was up even to a level of 20,000 US dollars. Then when all those regulation talks were happening, it was falling under the mark of $10,000. Now it is still at a level of about $10,000. Investors and experts really have a hard time to predict where all of this is going to go with the Bitcoin. I was just listening to an interview yesterday from one of the experts. He still thinks that there is still going to be quite a boom for the cryptocurrency Bitcoin. He was saying that he still believes that at one point it could be up even to a level of 1 million US dollars. Others are predicting that we would be seeing in the next weeks and months a complete crash of the Bitcoin, which then would of course mean for investors they would be losing pretty much everything that they were investing. So yeah, very hard to predict where all of this with Bitcoin is going to go, Chimi.
Now, it's interesting to know that a whopping 50 million hours a day were shaved off time spent by folks on Facebook last quarter. Now, is it that the world is getting tired of the Facebook, knowing me, knowing you appeal?
Yeah, very interesting. When Facebook was announcing the number, shares were actually dropping, then they were going up again. I believe this was kind of like a first shock that investors were having. But yeah, when you break down the numbers, of course, 50 million hours less on Facebook sounds like a lot, but when you really think how many million users, billion of users are on Facebook, this only means about 2 minutes less per user per day. Also, in general, investors seem to be happy with the restructuring of the Facebook timeline. Mark Zuckerberg, the CEO of Facebook, was announcing that they want to go back to their roots, where it's more about personal connection, getting feed from your friends and relatives, and not anymore from websites, companies, or from news organizations such as Channel TV, or also here on my end, DW TV. Of course, there's a strategy behind all of this. Facebook is not doing this because they don't want to send less spam. They're pretty much saying that an active user that is really interacting with their friends, with family, is much more interesting for them, rather a user that is just sitting in front of the computer, just reading what other websites or pages are posting. With that, they are hoping to even learn more about the individual user. For example, in my case, what time I'm doing my first post in the morning, which sport team I'm liking, which other TV shows beside on Channel TV and DW TV I'm watching. With that, they are of course hoping to know more about me, to give me more advertisement that at the end is more relevant for me, and then that might be leading me to buy something, and with that, of course, they would be making more money. Also, very interesting numbers. In North America, Facebook is generating an average of $27 with advertisement per user, where in Europe, it's just $9 per user. So Facebook is really saying there is still much more room to make even more money with advertisement.
Oh, that's much so. That's quite interesting. That's a very good strategy there. Thank you very much for your time, Daniel. Tomorrow, Deutsche Bank will be addressing the price. So I guess you would have a lot to tell us. Enjoy the rest of the day.